What a wonderful problem to have. If you come to me that you have too much money and your policy was designed too small, you're probably not going to be coming to me with anger, more like, wow, what do we do now? And we've had a lot of that. Thank God. It's been really, really tremendous clients for, I don't know, from our local community, different marketing strategies. And what a great, have I said it before? What a great group of people to work with.
Welcome to the Infinite Banking Initiative, a podcast from the Nelson Nash Institute, the official home of the infinite banking concept and becoming your own banker. I'm Lee Barganier, along with David Stearns, and we're your hosts. In this episode, we're joined by IBC practitioner Joshua Levy from Miami, Florida. Thanks for listening. Josh, thank you so much for joining us on the Infinite Banking Initiative. We're so glad to have you. Why don't we start off by hearing how you came across the infinite banking concept? Share that story with us.
Love to. And I probably talk about this with most of my clients. My wife and I and 2.99 children moved down here to Florida from New York, the People's Republic of New York. No offense, New York clients. At the end of 2011. So 2012, soon after we got here, it had to be, I don't know, 3 or 4 months. Walking home literally from synagogue Saturday night after the Sabbath. And I'm walking with this old feller. Quaint guy, kind of looks like Father Time. You might know him. And I asked to Ken Shapiro, what do you do for a living? And he says, well, what are you doing Sunday? I'll show you. I said, okay, show me. So Sunday night comes and he brings Becoming Your Own Banker and explained IBC to me and said, you should do this. Now, at the time, we met maybe 45 minutes an hour. So I said, honey, we're going to do infinite banking. And she said, no, we're not. So that's when, every agent's probably running to that. If you're not thinking, well, this has to be sometimes a joint decision. Oh, we got that straightened out. And there I was in 2012 with my own IBC policy. Small, $250,000. And since we stayed in contact, obviously, and we clicked, libertarian economics, conservative governmental social philosophy. And he said, why don't you come work with me? And I'm thinking, all right, guy, I just moved here with a nice 6-figure job. We're rocking and rolling. By this time, number third kid -3 was already there, and thank God. And I said, yeah, thanks, but no thanks. But little did I know that man plans and God laughs. So a year or so later, that company that I moved here with blew up, and I said, how about that life insurance thing? And he said, yeah, no problem. So I took my exam, and took a long time to do it because I was sort of moonlighting for other income. But when I did, we got together, and there I was. I never got to meet Nelson, unfortunately, but getting from Ken is a pretty great source or pseudo replacement for that for knowledge. And I don't know what else to tell you. We were in there from day one. So in fact, none of my, other than SGLI, which Servicemen's Group Life, which is I don't know how, it's an annual renewable term policy for service members and certain government employees. I never had life insurance, and so for my only private life insurance experience was with IBC design policies.
Kenneth had a talk with you, gave you the book, and you immediately were ready to do $250,000 annual premium.
No, death benefit.
Oh, that was $250,000 death benefit.
You're right.
Okay, come on. I was thinking premium, not death.
I will elaborate that the 3 kids, now 6, thank God, are very expensive. That plays heavily into what we do with IBC. And no, sir, it was not $250,000 in premium.
I didn't think so, but
good point to clarify.
I'm looking for clarity here. That's what I'm saying.
So what was it when you read Becoming Your Own Banker that really clicked with you, that made you say, this is what I want to do. I'm interested. I want to move forward with this. What about that book?
A libertarian economic philosophy. I'm not saying political or anything, but the idea of rugged individualism through economics through private contracts. Like Nelson says, what a great group of people to work with.
Mm-hmm.
And certain parts of the book, it has to. I think everyone's experienced. Some people read it and you smell truth and you want more of it. Others, it's not for them. Why? For maybe the accountability, maybe the fact it's not a quick, get rich quick. Maybe because there's nothing new and flashy about it. But in fact, being older, meaning the material life insurance as an institution is very important to me, because I don't want how do the kids say it, the new hotness, right? I'm not looking for the next Bitcoin style investment to grow our wealth. We're okay with the slow path. Something about infinite banking, a parallel I like to draw, if you'll allow me. So 2 Kings, and I actually pulled it up to, don't think I'm a chapter and verse guy and everything. Chapter 22, 2 Kings. Hilkiah, the high priest, found the scroll of the law, brings it to the king and says, look, it's all right here. We don't have to find something new. This is what we were supposed to do all along. And when I speak to new clients, I mean, if the ones that are still alive after hearing me for an hour or still willing to come back, God bless them, we talk about Nelson's story from the beginning of the book, which is, I tell him it kind of sounds like a country western song, right? It's 4 tragedies in a row, 4 hits. And what helped save the day was infinite banking. So yeah, David, you come up in almost every client meeting. Now wait, that second granddaughter.
That's my sister, my older sister. So, yeah.
Yep. So what's the solution to all this is something that was cooking in the background all along. And, that was our exact experience. A few years after opening our policy and, not cooling off to IBC, just not really engaging it. We needed money. And lo and behold, just like Ken said, wow, there's money in there. Let's take a policy loan and get out of the rut we were in and move forward with great alacrity. So it's the idea of nothing new. We're not recreating the wheel. It's something that's always been there. And it's founded in sound principles, and therefore you can rely on it. And the folks that connect with that, they really get it. The math and the economics is almost secondary to the philosophy of the whole thing. If you find somebody that agrees with you, like Nelson says, well, what a wonderful group of people to work with.
Yeah, it's absolutely secondary. It's a concept. So that's the important thing is to understand, what privatized banking really means. What are the different components where you can implement the concept. And yes, life insurance is obviously critically one of the components. But if you don't understand the concept, then it doesn't do any good just to buy whole life insurance. I mean, it's a great product, don't get me wrong, but it's like, oh, well, what am I buying this for? Why am I paying premium for whole life when I can get a larger death benefit with a term policy, whatever? So it's understanding the concept, which is, privatized banking. And so what problem does privatized banking solve? That's the $1 million question,
So we have a process of a lot of theory, philosophy, and then some personalized numbers based on a client interview, a financial interview. But one thing I stress, I in my mind, it's like answering the straw man question or setting up a straw man to answer the big question. Why doesn't everybody do this? Forget about the real thing that I think when you're, what do people ask you about IBC? What's the rate of return? I'm sure we'll cover that. But what does everyone see glaring at them the first time they ever look at a spreadsheet or an illustration is, wow, I paid in so much and I have, relatively little or less compared to some other investment I can invest in. Well, right away we dispel the misnomer that this is an investment, that we're building a banking business. We're building a banking business, akin to, parallel to. And when we go over, well, let's talk about what we're actually purchasing. We're buying a policy. We're paying a premium. We are obtaining a death benefit. So there's a cost. And there is money growing before you have the SADs about that it's less compared to what you paid in. Let's think about what you can do with it compared to your average investment. if you want the big returns, you're going to sit there and follow the market and the ups and downs and all the emotional roller coaster. But here's something you can plan on, you can bank on. And if someone says, by year 3, I want to be buying the car. By year 5, I want to be putting a down payment to the house. By year 7, I want to, et cetera, et cetera. And if we can step them through that plan, it helps them connect. Now we're talking about the practical things, not just the philosophical connection to the concept itself. And then finally, when you show them, there's going to come a time when this is an untouchable investment, and your friends who may have laughed at you, I tell them probably quite literally, they're all going to laugh at you. If you go back and who hasn't had a client try to explain it to a spouse or friend and came back and said, I don't think I want to do this anymore. Not for me. Why? Well, I couldn't explain it. And if they were only brave enough, right? Like Nelson writes, if you're only brave enough to realize that there's going to come a time when you can't touch the returns you're making on this, and I'm talking dollar returns, not rate of return, who wouldn't do this? Well, I guess the ones that would fail the test as a child, do you want 1 candy bar now or 2 in 5 minutes? That's a pretty good litmus test for if you're going to have what it takes, I guess, to adopt this and use it in your family and your life.
It's a different mindset. You have to approach it from a different perspective. And it's sometimes folks just, they never get the value of doing it like that. They can't get away from the numbers. They can't get away from the rate of return and comparing all that stuff. Even insurance people, I had a conversation with a practitioner the other day, and I was shocked because he was still trying to debate me that, it'd be better to buy a car and finance it through the dealership at 2% than do a policy loan at 5%, because the numbers. I said, well,
look, there may be cash flow times to say that, but overall, when you consider and then maybe with an immature policy, there might be times when someone doesn't want to go that route. But
so you've been an authorized practitioner since when?
I think 2018. I went back and looked at 2018, 2019. However, I've only been to the think tank twice, last year and this year. Now, you haven't accused me yet, but let me defend myself. It's very hard to travel for us, for our family.
I do the same thing.
So when you said Orlando, I said, oh yeah. And that was an amazing experience. This last year was, last month was just awesome in Birmingham. Even for our shortened visit, we had to leave a little bit early.
Good. Well, I'm glad you guys liked it. We always have a problem, with the Sabbath with you guys.
Yeah, we'll figure it out someday.
Yeah,
we'll spend the weekend in Birmingham someday.
Yeah, I hear you. So tell me about your naval career. How you get involved in that?
Ah, man. So I think earlier you mentioned Maverick is the most famous thing. How fickle was this 12-year-old to see Top Gun and say, I want to join the Navy? Well, I heard before that it was one of the best recruiting movies of all time for the Navy, but at the time I was probably still in the Civil Air Patrol thinking Air Force. F-16s are the coolest thing ever, young guy. And then out comes Top Gun. So yeah, I changed my whole trajectory to I want to go to the academy, and made my grades work and activities, and there we were, summer of 91. And from there it was pilot all the way until commissioning physicals, when they say, here's what you're qualified to do. I didn't have glasses at the time, but in the irony of God's ironies, I had 20/15 vision with bad depth perception. So they said, listen here, Eagle Eye, pick something else. So I picked flight officer, and through flight school, where we do everything but solo, by the way, and the T-34 Tormentor, or Mentor as it's called, the Tormentor as the students call it, Pensacola Beach, great stuff, great young 22-year-old. By the way, someone tried to sell me a VUL when I was 22. There was a retired officer making his way through all the flight students. And of course, everyone passes, preferred plus. This is going to be great for you, young man. You'll be a millionaire by the time you're 40. And I don't remember my exact reasons why, but I said, nah, no thanks. I'm glad I didn't, in retrospect, right? It was It was a VUL from the early 90s. Imagine how fraught with risk that thing would have been. From Pensacola, I went on to my first squadron. I chose the airframe that would let me, ironically, again, stay on land and not at sea most of my time. So it was the EP-3 Ares, infamously the aircraft the same type of aircraft that crash landed in China in 2001. So I did 3 years with my squadron, 4 deployed to Spain and detaching to just tough stuff in Crete, Greece, and flying Bosnia missions and all over the Med and off to Turkey for Allied Force. Not for at the tail end of it was called Allied Force then, right? Enforcing the no-fly zones in Iraq. Remember the halcyon days of $5 trillion national debt and long drawn out wars just lasting 3 or 4 years, not 20. And from there I went to Naples, Italy, to what was then, I'm sure it's still called CTF 67. It's basically the intelligence collecting branch of Sixth Fleet, supporting the admiral there, flying a desk for 3 years, young guy, having a lot of fun. And then when my time was up, the reservists who were there, by this time supporting Gulf War II, they said, look, if you go reserves, we'll activate you and bring you right back here to Naples, Italy. So I said, yeah, that sounds cool. So I think I did exactly 1 weekend drill in Willow Grove, Pennsylvania, right near another Josh Waxman's father's Philly cheesesteak shop. He said he used to sell the guys in the base all the time. So, but I was only there one snowy weekend, so I never, even when I ate Philly cheesesteaks, I didn't get to go have one. So, but then after that last year in Italy, I did like most people do. I ran off to Israel for 2 years to study in rabbinical school, right? Yeah, everyone's probably gone that path.
Everybody does that. Yeah,
everyone does that. And not just out. It was a convergence of divine providence, I would say. Met the right people, and got a good influence, in my estimation. And I said, let's put business on hold. What does every junior officer do when he gets out? He goes to work for medical device sales, pharmaceuticals, high pressure or high tech warehousing and operations. So I started even some of the interview processes, and then said, nah, let's go to Jerusalem instead. So, but as destiny would have it, 2 years there, loving what I was doing. What this plays into, by the way, I did a series called the Learning from My Biggest Financial Mistakes. And one of them was, what does a guy do when he's, making pretty good money as a single junior officer with flight pay and overseas and combat zone pay? Because even if you weren't fighting, you'd fly through one every once a month if you ever got to do that, and be tax-free for the month. And then there you are sitting with your money saying, well, all I like to do is buy, eat Italian food and buy clothes and do whatever, goofy JOs do when they're, frivolous like that, the frivolous ones anyway. And so I just plowed all my money into a USAA, high risk, or what was it called? High growth IRA, traditional IRA. So when I got out, I had exactly 1 month's pay in my USAA checking account, and the rest of it in an IRA. So here I was now, for planning to spend, I didn't know how long. It turned out to be 2 years overseas, paying room and board, loving what I was doing. But what was my income? It was withdraw from the IRA, not even really considering the tax consequences until I think I even skipped filing a year when I was there and couldn't care less about filing taxes. But my, reintroduction to living in America, I was 33 at the time. And I said, what do I do now, Rabbi? I've been here for 2 years. He said, move to Brooklyn, go get married. Stereotypical as it sounds, I said, aye, moved to Brooklyn. And fortunate to meet Mrs. Levy, the future Mrs. Levy, relatively quickly and painlessly. And then filing taxes, and then realizing, wow, we spent out of maybe our first 6 months of marriage and whatever, I spent all 75 grand of that thing. Here's your penalty, young man. Wow, $7,500. That hurts. So what a lesson to never ever go down that path again. But after a few attempts to figure out what I wanted to do, I ended up with that company that brought me down to Florida, and here we are. We're loving it here. Been here in the Free State for just over 14 years.
So, Josh, as your family grew, how about your family system? Did they grow as well with children, and how did that impact you guys personally, your lives?
I would say, I mean, no, I mean, no one, everyone's unique, but my story is probably not unique here. Training careers at 40 with, I don't know if we had 4 or 5 at that time, kids, and now brand new in the life insurance industry. There have been many years where income was a struggle, but we've kept our policy in play with stuff that also, uh, because of our values, we want all of our children to have gone to private school. I mean, not not like fancy prep school. We're just talking their religious private, parochial private school. An example I use often to relate to other expenses, like even paying rent, it goes right into he who has the gold makes the rules. So when you get handed a bill for 20K for your kids for primary school, the assumption is you're going to go on the monthly plan, and everyone will pay per month. By the way, you're going to pay a fee for that. They're going to lose their fee, especially if you pay with a credit card. But there's just a service fee to pay monthly anyway, because they're not dummies. If you pay over time, there's the time value of your money. But very, very few of the parents would say, hey, can I pay you just lump sum cash in full? And eyes widen at that. We would love to have your cash now. And I said, if you want to have my cash right now, can we talk about a discount? And more years than not, the answer is yeah, we can talk about it. Your discount, Levy, and because he who has the gold makes the rules. And what do you do when you've gone and negotiated yourself a discount by paying in full or by paying a lump sum up front? Well, you have to pay yourself back. And actually, this is I talk to clients about an example of a client of mine who had the prospect of renewing his lease and having to pay rent. So same thing. His rent was $2,000 a month, and so he offered his landlord that. I said, go offer 20K for the year, and I think they negotiated to 22,000. So a 1 month discount. We just got a discount. Who doesn't love that? So what do? Well, now, what a practical example. Don't steal the peas, right? Even rereading, becoming your own banker. It's hard for some to relate to the grocery store example. However, this is a world. Now, one can get it, of course, with the right instruction, but it's easy to grasp. I just negotiated a discount, and I took a policy loan, obviously, to pay that rent. Now, what do we pay ourselves back? Well, this is a no-brainer. I even made a spreadsheet that went over what it would look like for our 12 months of that year. It was, here's my balance, my principal going down. Here's my accrued interest. And here's this third column. What am I paying? What do I label it? The don't steal the peas repayment rate. And that was full tuition that I would have paid monthly, and full rent that he would have paid monthly to the landlord had he not negotiated the discount. And what do you have at the end of the year? You've got some profit. You pooled your capital, you deployed it, and if you have the discipline, which is always that has to undergird everything. You have to have the discipline now to actually pay those monthlies when no one's in charge but you. You're the borrower and you're the loan officer, and and that's how we've employed policies. Of course, some years we've bought cars, other years we still lease, right? You can imagine how many Honda Odysseys we've gone through. I think we're on our 6th one, but some of those decisions depend on cash flow at the time, but that's really what we've done with our policies, and getting to a point where we can, some years we'll max out. We have a very flexible PUA rider, not to harp on specific companies, but there's differences in the flexibility there. Some companies, they give you, I call it to clients, rollover PUA minutes. Remember the old cell phones that you would only make your calls after 9 because any minutes would roll over to the next month? And you're like, yeah. Now we can make double the calls, but we'd push off our calls till 9 p.m. to keep getting those building minutes. Now tell that one to a Gen Zer, he has no idea or she has no idea what you're talking about. but she also they also don't know what it means to sit in your dorm room window with that brick calling home from a cell phone. Not that you couldn't schlep to the payphones, but the novelty of using that shared 1990s cell phone. With some years when we can max out a policy, premium NPUA, other years it rolls over and we can make it up in latter years. And every company has their own flexibility. That's highly dependent on what a client describes to us as their cash flow. Are they employees? Are they kind of fire and forget? We'll just pay it and we'll pay monthly and our PUAs, scheduled PUAs, and we don't need much flexibility. Fine. This is the great thing about being independent and having a whole quiver of arrows to choose from when we're finding what to do, what to recommend to a client.
Well, let's talk about your clients. You mentioned your client who is the renter. How else have you seen IBC impact your clients' lives? When that light bulb moment maybe goes on, or have you ever had a client come back and say, I need more. You didn't sell me enough." Any stories like that?
We did. We did that. I mean, certainly, I said I've only bought whole life policies, but in my early years, when I would try to create any business, it was the conversation was often, "Hey, do you have term insurance? If so, I can match it most likely for the same rate, or get you more, or I can get you a cheaper rate than what you have, or more insurance for the same rate." All these things for a junior insurance agent to be able to bring his mentor into the conversation. But when you're getting brave enough, or no, I mean, Ken, Ken will run through brick walls. But when I was starting to run my own meetings, and I remember selling a policy to someone who was an HVAC tech, and he maxed it out, said, "I need another." And we got another one. And he said, "I maxed it out, I need another." And it wasn't, he was very aggressive in paying premium. He should be blessed with success, but he got a third policy from a second company, and a fourth policy from a third company. That one was a child policy anyway. Now, a guy who was constantly buying, number one, buying, taking policy loans to fund the jobs up front that he's going to do, taking money, even financed money from his clients, where he's making a profit on what he charges his clients who are paying him on a schedule or on terms. But he quickly saw the light and has brought, I don't know, 6-7 referrals since that moment. So like Carlos Lara and Bill Murphy, Bob Murphy, Wright, that a business owner really gets it, and this guy really got it on the cash flow side. A lot of our clients last year were, for whatever reason, divorcees or single moms, and the types of feedback we get, because at least when I do a sort of a welcome aboard meeting, I can't get away from naval terms sometimes. You've got your policy. Let's log in. Let's see what you can see on your client portal. They're all really coming up to speed for ease of taking loans, ease of repayment, ease of unscheduled PUA payments. Let's go through this, and then the feedback of satisfaction of, wow, my family's taken care of. I feel like I'm doing something with my money that's not. We know it's not risk. I have a plan. They're the type of people that meet the criteria we talked about. They're, like Nelson says, that what a great group of people to work with, and they see the light at the end of the tunnel in their mind's eye before it's even on their statements. But they're so satisfied to have that covered. It means so much to them, which is for us, it's a humbling responsibility to say, I better have done this right. I better do well by this client, and thank God that's the feedback we get.
Yeah, so that's a critical point. I'm glad you brought that up, because a lot of people get so excited about this, they forget about, tracking everything, so you understand that you're not getting underwater with policy loans versus premium and whatnot. So having a system like that in an onboarding process is critically important. You got to be an honest banker. That's all there is to it. The one point of clarification, you said that your HVAC business owner maxed out the policy. So you're talking
Yeah.
about he borrowed as much as he could on a continuous basis. So he ran out of capacity for policy loans. That's why he
Right.
added additional policies, right?
Um, on the other end, he maxed out his premium and paid up additions payments in,
Yeah.
and repaid all policy loans, and business is booming. And what do you do now? I think I need more capacity, so I'm going
Yeah.
to have to create another bucket for my money with
Yep.
another IBC policy. And you know what? I think it's a disservice to shoot too high. I would rather have someone say, this was great, it meets a lot of my needs, but I think I need more. And if they're blessed with success, we can definitely help them create another space for that. Hey, they're expanding their banking system.
Yep.
That's
Yep.
right out of the book. There's
Yeah.
nothing wrong with
That's
that.
yeah. That's classic IBC right there.
Yeah, very hard to say. I have exactly what you'll need, and this will serve you forever. That's hard. Maybe with employees who are, again, they're earning a paycheck, and everything is, they know their numbers. They know their, we like to cover income, expenses, savings, and debt. And they've got the numbers. I take a vacation, I get a tax refund, which we talk about how it's better to have a higher take home pay. Well, they know what they got coming in. They know their expenses. They know they're planning for college, or they know that their mortgage will be, we might use this to pay off a mortgage. We might be almost done paying our mortgage, so we're going to need some capacity in the future. But they're not really making huge waves as a business owner or an entrepreneur might more readily tend to do. So but you still, it's all about being, being going with a moderate expectation of growth. And then if they exceed that, wonderful. We say, what a wonderful problem to have. If you come to me that you have too much money and your policy was designed too small, you're probably not going to be coming to me with anger. More like, wow, what do we do now? And we've had a lot of that. Thank God. It's been really, really tremendous clients for, I don't know, from our local community, different marketing strategies. And what a great, have I said it before? What a great group of people to work with.
Well, speaking of that, you mentioned Ken several times in this conversation and him as your mentor. Can you speak a little bit to maybe those practitioners who are just starting out and the importance of establishing a solid mentor relationship?
It's awesome. You know, if he sees this, or if he tells me I'm not going to watch, it's just you, but maybe he will secretly watch. He'll say, he'll hear me saying in the first years of meetings, and even to this very day, don't get cute. Meaning sit there and watch what I do, understand with a lot of repetition what we're doing here, and then you can start to replicate this and add your own style, your own personality will come out, obviously. But it was just like, it was like seeing you know a, an old expert, an old hat at IBC doing this, and having the credibility of a life story that says, I used to do it the conventional way. Although he is never a conventional guy. Apple store owner, former hippie. He doesn't always say that, but I like to, he doesn't toot his own horn. It's something to be proud of, a very eclectic background. But when he came to IBC, he came to the well and drank deeply. And I got to see those meetings repeated time after time before, okay, go do it on your own. And thinking, am I gonna do right by this client? Well, the mentee doesn't have to worry, because their mentor should be looking over the work and saying, yeah, this is designed right. Or I would never do that for a client. Or why you cut that rider off? That, it's getting technical, but why are you limiting how much a person can pay in? One of my early problems was thinking pessimistically. What if the client won't be able to pay? The mindset's important. What if this client, as should happen, grows in their industry or career and has more to pay and has a greater ability to pay a premium, i.e., to build their basis of capital? And so having someone that has seen those some of the mistakes, and I think Ken admitted to some early mistakes. I've made some too, and either with own monetary discipline, like spending an IRA or putting it in the IRA in the first place, but having that to to build off of and know that, wow, I can navigate this because someone else has done it. Remember the old Cy Sperling commercials? I'm not only the hair club for men president, I'm also a client. So, I tell client, I'm also a client. See, I have a full head of hair. But if you've gone through the process and you've utilized IBC your entire career, you can readily help people to build the same thing as you're building. And of course, all junior agents should strive to have their own policies and implement, their own. I mean, that just speaks to discipline. Can you pay a premium? Yeah. When we talk about now, you are the banker, and you've taken a loan, and you've created a um, a responsibility to, be your own loan officer and make sure those payments come in on schedule. You know what is a beautiful flexibility that IBC has over a conventional bank is that you should pay and you should pay back until a situation arises when it might not be time to pay. So a story of a client who we designed a policy specifically, happens to be another HVAC guy, to create a place where he could deposit cash and take a policy loan to buy a new work truck. And in underwriting, his truck broke down, and he had to go to a credit union and take, it was like a 12 or 13% 7-year loan on a new truck, checking with him on a yearly basis. And so we said, okay, you're approved now. Let's take a policy loan just like we planned, consolidate that loan, pay exactly what you were going. I asked them, were you planning on skipping any of those payments for 7 years? Of course I wasn't I can't skip payments. Great. If you have that discipline, you can now know with a surety that you should pay yourself back your policy loan the same amount of money. And whether it has to be 7 years, that depends on the loan rate, but you have the discipline. So I call him back on a yearly annual review. He's paid nothing. And I said, what happened? He said, my wife got sick right after that. I said, wow. He said, I had to divert all of my income remaining to helping her get back on her feet, childcare, etc. And I stood back and I had to think to myself, wow, if you have a conventional loan and you try telling them, my wife's sick, can I have a few months off? It's first month mastigram, second month fees, third month repo or credit, adverse credit outcome. But being your own banker, you can actually make that decision. I have a plan until I have to divert, and I'm the one who gets to make that call. So that's just it's anecdotal, but it just shows the power of being your own banker in a real life story of someone who otherwise, go try. What happens if they repossess a work truck? Now there's no income coming in. It could have been horrible.